Good morning, everyone. Good morning, good afternoon, good evening, depending on where you are.
Good morning, Mrs. Okonkwo.
Good morning. Good morning. Thank you. Hi, good morning. Please help us pass the message. Teachers should please join. We're going to start in 2 minutes. Good morning, everyone. On behalf of the Executive Director, Dr. Kehinde Wani, I welcome and I thank you for joining today's session on financial literacy. I want you to know that this session is tailored specifically for teachers. And as we all know, financial literacy is not just a desirable skill, it is an essential tool that helps us to navigate life's financial complexities. And as educators, we know that one of the most important role is the fact that we are shaping the future generation. For that reason, we have to be able to understand financial literacy. As we also know, we are role models. In order for us to lead by example, we have to understand financial literacy. That's one of the reasons why we're having this session today. Understand financial literacy demonstrates how to be financial literate. And so people can learn from you, your students can learn from you, they'll understand that my teacher understands this, it's beneficial, and then you'll be able to, lead by example. One of the things we had asked that teachers bring to this session today is an example of your financial literacy plan. When we had our Welcome Everybody Back session at Zamalausa, our executive director trained us on personal growth. And one of the areas was finance. So financial aspect of it, of your personal growth, is a mandatory aspect that you were asked to come in with today. So I'll be asking that if you'll be kind enough to share your financial growth plan. Is there anyone on this platform that is willing to share their financial growth plan? That will be really helpful. As teachers, we need to lead by example. So if you can share your financial growth plan, we will really appreciate that. Please indicate by raising your hand or typing in the chat room if you'd be willing to share your financial growth plan. Anybody? Are we all saying that we didn't do anything about our personal growth plan? I'm sure we did. Please share your financial growth plan. Is there anybody willing to take up that challenge? Share your financial growth plan. Okay, I'll quickly go through mine with you. Mr. Savia, okay, no, I can't even share. So I'll quickly go through my financial growth plan with you. So one of the things I've had to do, just an example of financial growth plan. So for example, what is the why? Why do I need to have a financial growth plan? What's my strongest reason for wanting a financial growth plan for a certain duration? So for example, for me, I want to create a balanced, I want to enhance my work-life balance. I want to make sure that as I'm working, I'm enjoying my work. I'm also enjoying life at home. I'm enjoying life with my family. So I want to create that work-life balance. I also, in the course of that, I want to reduce stress of commuting, going home from work, coming to work. I want to reduce that. I also want to increase my productivity at work. Now, in order to achieve this, what do I need to do? What's that thing, or what are those things I need to do? So one of the things I've identified that I would need to do is rent an apartment close to school. If my apartment is close to work, it's going to help reduce the stress of commuting to my location, coming to school. In case I close late, when am I going to get home? So having considered all of that, I want to rent an apartment close to work. What kind of apartment do I want to rent? Is it a 3-bed apartment, a 2-bed apartment, a self-contained, things like that. So you have to be very specific. So assuming you want to rent a 2-bed apartment close to work. Now, the second thing is what are the actions you intend to take towards achieving those goals? One of the things I have here, I'm going to just list out a number of things I've listed on my growth plan, is to create a detailed budget. I need to have a budget. In order to have that budget, I also need to know the trend of prices of apartments close to where I live. So I just can't say I want to rent an apartment if I don't know how much it's going to cost me. I also need to follow with trends. How often does it increase? I need to have a plan that will help. Now I have a budget. I also need to think about my salary. Will that be sufficient? If it's not going to be, I need more. I need to think about investment. What will I invest in to help increase my income so that I can rent an apartment closer to work? I will reduce the stress I'm going through. I will be able to increase my productivity. All these are things I need to consider. And I also have to have a duration. Assuming I want to rent an apartment in the next 24 months or 12 months, I also need to have a plan how long it's going to take me to put my savings together. So I have a budget. I also have decided that there's a percentage of my salary that will go into savings towards achieving my goals. So if you have this smart plan, it will help you achieve this goal you have set out to achieve in order to be able to reduce stress, in order to be able to increase your productivity, and in order to be able to have a balanced work and, life at home. So having this is an example of what you should have when you have a financial growth plan. So having shared mine with you, is there anyone that is willing to share their financial growth plan? Should we be calling names? Mr. Savia?
Yes.
Mr. Savia?
Oh, good morning.
Right. Good morning. Good morning. So everyone, welcome once again. No one is willing to share their financial growth plan. I have shared mine. I think we can start off.
Yes, we can start off. That's a lovely plan you have there. Thank you for sharing.
Thank you.
Good morning, everyone. My name is Manuel Xavier. I'm the project coordinator here with TTM. We're glad to have all of you on board, and we hope that we're going to have a very productive session this morning. Already, the introduction has been quite enlightening, and we're looking forward to better progress. We want to welcome Mr. Lushesi, who is the head of finance at Meadowhall Group. He's very vast in financial literacy options, and that's what we want to hear this morning. So we're going to give him 20 minutes to educate us. And please outline your questions at the end of the session. There'll be a question and answer session where we can interact more with him and learn more. So please write down your questions and get ready to share. We don't want what happened earlier where no one was ready to share. We hope to hear more from participants at the end of the session. Thank you. Over to you, Mr. Lucius.
Hello, good morning.
Good morning. We can hear you. Go ahead.
Yeah, good morning, everyone. It's good to be with you this morning, and I've been following up. I like the example given by Mrs. Okewo, and that's a good start for us, and I think we have picked one or two lessons from there. So I'm pressed for time, but I will try as much as possible to ensure I cover everything that is very important for us to know. So I will share my slide, and I'll also be giving some example as we go ahead this morning. So let's feel free and relax. So learn to ask questions. So one moment, please. Okay, so when we talk about financial literacy and financial growth plan, these are key tools that we can't afford to play with it, because we all know the importance of finance to everybody's life. Every day we spend money, we consume, we buy, we save, and we do a lot of transaction, both using cash and using electronic form. So we need to be ahead of information and take advantage of situation around us. So financial literacy talk about ability to understand and effectively use various financial skills, including personal financial management, budgeting, and investment. These are how we able to take advantage of those information that we have, those skills we have learned. Like if you know how to set your budget at the beginning of the year, how to manage and how to monitor the budget. If you know about savings, advantage in using a current a savings account or a current account. And if you know about investment, these are things that we are talking about being financially literate. So our understanding of these and using them effectively is what we call about, I will talk about being financially literate. Then important, like I said, in today's crucial economic condition, it is important that we empower ourselves to take control of our financial future by making informed decisions about our spending, our saving, and investment. And another one, debt management. But this is another challenge for a lot of people. The fact that we have the opportunity to take some of these banks, we offer different loan structure, different things, and we have a lot of financial platform. They make it so look simple to get the loan, but they won't tell you about the compounding interest, the number of time. So we need to be very, very careful before we take up any loan consumption. And we also need to determine, why am I taking this loan? What do I need it for? Is it for consumption? Is it for development? Is it for asset acquisition? So those are things we need to know concerning being financially empowered. Talk about taking control of our financial futures by making informed decisions about how we spend, what we save, how we invest, and how we manage debt. Now, say for example, how do you create a budget and ensure you stick to that budget? You prioritize your expenses, avoid overspending, and achieve your financial goals. So what it means that at the beginning of the year, on a monthly basis, they need to have a budget. Let me quickly flip through. Let me show you an example of one of the of a budget, of somebody's budget. 1 minute, please. If somebody's like, can we see this? Okay, so let's look at it. This is somebody's monthly budget. You can see how the person has analyzed it. House contribution monthly, what it does on a monthly basis. He has analyzed it. Miscellaneous expenses, his family obligations, then his personal laundry, offering, car, fueling and park, food, other miscellaneous items the person has. He has it there. And also, the person also put investment there. These are the equities and shares. These are other investment platform the person has put in there. At the end of the month, the person is expecting a total money expense of 305,700. This is the person's salary, and this is what he has left to save. So at the end of the day, you can see that his total money expense is about 69% of his salary, while he has about 31% left to save. So in between this, the person will be able to see clearly anytime he's going above what he has budgeted for, he's able to know where that is coming from. So budgeting is one of the tools that we need to use effectively. We know how to operate spreadsheets. Even if we don't know how to operate spreadsheet, with your calculator, with your diary, you can put all these items down and analyze them on a monthly basis to know where your major money is going to, and to know where to cut down on expenses, unnecessary spending. And now, looking at the economic situation that we are now, it's important that one is to manage fund effectively, because the price of things are going up on a daily basis. So you'll be able to know, oh, for now, I'm not going to subscribe for DSTV premium again. I can't do premium again. I'm going to do maybe Compact Plus. Oh, I can't do Compact Plus again. I'm going to do, so it's about taking alternative. There are a lot of alternative for us, but we don't analyze this on a monthly basis. Take, for example, if you do a monthly subscription of 10,000 Naira on DSTV on monthly basis, I mean, at the end of the year, annually, that is how much, that's like 120,000 Naira on a yearly basis. So, but with a budget, I like it. You can do your budget on a monthly basis. You can also do it annually. I mean, annually, go estimate for other months. Then you can start comparing every month what has happened and be able to track where you are spending too much or whether you are achieving your budget target. Any 1 Naira one is able to save in this economy matters a lot. So that's important of having a budget and monitor. I use it to monitor how we do our daily and monthly expenses. I hope I'm saying very, very laudable to you. Hello?
Yes, we can hear you.
Okay. So let's continue. Let me go back to my slide. So like I said, as financial literacy, we empower individuals to achieve their financial independence and security. Now, the component of financial literacy, I think I've mentioned one. Then I'll talk about budgeting and financial planning, understanding debt management, investment basic, retirement planning, risk management, and insurance. Now, taking insurance is one of those financial literacy too. If you have a car, apply, especially in Lagos, if you apply Lagos rule, you know how it is. The rush hour in the morning, closing late in the evening. So you definitely need a car insurance. And it's important to take a comprehensive insurance so that you are protected against not just the third party, even you cover yourself as well. I've had experience some few years back. I bought a car, and in less than 6 months, I was involved in an accident, and the car became a write-off. Just less than 6 months. Fortunately for me, I took a comprehensive insurance, and the insurance company was able to pay me about 80% of the cost of the car, and that's what actually saved me. And one thing about car is that the day you purchase the car, you drive it out of the garage. I mean, is as good as anything can happen to it. So at that, even if you have not fully paid the seller, if anything happens to the car, you have to find a way to pay. So it's important we take advantage of something like insurance, HMO, as part of our financial literacy. I've seen people that their employer are offering them HMO, but they are not taking advantage. In this current situation, at least with your HMO at the minimum basic, it covers you for at least some basic thing. And it can also, opt it up so that it does the basic and the care for your family instead of having to rush out or for emergency. If you have HMO there, the amount being taken out on a monthly basis, worth it. Some people are not looking at that direction. They feel like, oh, it's too much of a burden. But these are also because they don't understand the importance of this. If you have your HMO cover, it does cover you and provide you, that insurance, that health care you need for the whole year. And you will not need to worry. You will not need to spend unnecessarily on drugs. At least they will do the basic cover for you. And that is fine. The same thing for, your property. Your household item, you can insure them for a sum. We have a lot of brokers out there that you can call. They will just come in, take a schedule of the list of items in your house that's at least a basic item you have. They will tell you how much premium you need to pay. So it's important we take advantage of the insurance plan. Then a financial growth plan outline your strategy and goal for increasing wealth and achieving financial objectives. It may include elements such as saving, investment, and debt reduction. Like what Mr. Okeawo mentioned earlier, I want to rent an apartment in another 12 months or in another 1 year. I found out how much this will cost me, and I've also learned about how much income comes in every month. So I will ask myself the question: how do I fund this? How does the landlord, how do they collect their fund, their rents? Is it on a monthly basis? Is it on a yearly basis? So it's important to get those information. Now, I haven't gotten those information. The question is that, how do I raise funds? Oh, I need to save 30,000 naira every month towards my rent. So how can I save it? There are a lot of, financial platforms that you can use to do that. You can do a mutual fund savings by telling your bank to do a standing order. That, okay, every month I want you to take 20,000 naira to this mutual fund account. And having done that, you know that, okay, if this goes on for a year, 20,000 for a year, you know how much that translates to at the end of the year. So that means you have been able to narrow it down to a specific amount that you need to save every month for another 12 months. Now, if that is not enough, you now ask yourself, what are the other means I can use to raise money? Do you have a cooperative that I've had saving with? Does my organization run a cooperative? How much can I get from there? What is their interest rate? My bank, if my bank offer me a short-time loan for a year, how much is my interest payment over it? So by the time I put all this information together, I will be able to know the benefit. Now, financial benefit is number one, savings is another thing. Now, in what Mrs. Okeawo mentioned, she talked about mental health, work-life balance, and being able to have good time at hand. So we find that having a good financial plan is not just about money alone, it also affects our health. So if you take good decision, you'll be calm, you'll be, think right to take some decision, and you'll be fine at the end of the day. So having a plan and analyzing those plans into, is it a short-time plan, is it a long-time plan, is important. Then after that, you set the objective. Okay, at the end of the year, I want to have 200,000 naira savings for a particular project. You have tied it to something. Why do I need it? You have stated those things. How much do I need to save every month? You have analyzed it. Then how do I save it? What account am I put? If I'm going to save 20,000 naira and I'm withdrawing the money, put it inside the wardrobe every month. You know I will not be tempted to take it anytime I'm in need of money. But if I put it in an investment account, we have all these other platforms. We have Piggy First savings that can allow you to lock in fund, and you'll not be able to touch that fund on a specific time. And if you are going to touch it before the maturity date, they will charge you, a kind of a penalty. So it's just to ensure that you are able to leave that plan runs for like 12 months. And this, it can also do what we call, there is a pooling, whereby 20 people can come together and say, okay, you know what, these are 12 people that I trusted. Can we do a saving challenge for 6 months, for 8 months, for 12 months? So there are a lot of, investment tools available that we can leverage on to achieve our financial growth plan. Then another thing is that after set that plan, you also need to review it. Like I said, you define your short-time plan, whether it's short-time, whether it's medium or long-time financial goal. You prioritize it based on importance and feasibility. Then you say it must be specific, it must be measurable, it must be achievable, relevant, and time-bound as SMART goals. The same way we set goals for ourselves, for our career, it's also the same way we set goals for financial goals. It must be smart enough. You must be able to measure it. It must be achievable. It's just like someone that is earning, you know how much is earning, and is now pointing to a Rolls Royce. I want to buy this Rolls Royce in 6 months. People will ask him questions. So that's about being, achievable. Then how relevant it is. It's important that we know that, and it must be time bound that, okay, in another 12 months, I want to achieve it in 2 years, in 3 years. So that is setting financial goals. Then I think I've talked about budgets, about being able to identify your income, how much I earn, is there any other extra income coming in, and analyze it against the expense on a monthly basis. allocating funds to different categories such as housing, transportation, entertainment is important. That will enable us to know how much goes out on those things. And if you don't, take record of all this transaction, you'll not be able to know how much is going out. If where you have said, let's say, for example, now, if I said objective was spending 30,000 naira on fueling, I will ask myself, is it achievable? Now, remember, in the last 1 month, the power situation in Nigeria has worsened. So if you have been spending 30,000 naira on fueling in your house on a monthly basis, that 30,000 naira may not be enough this time around. So there is also the need to review and adjust our budget on a regular basis to reflect the changes in financial circumstances in the country. Then investment for growth. Investing for growth. Understanding investment options, including stock, bonds, and real estate. Now, investment and savings are two different things. For savings, you are saving towards a target. Whereas for investment, you are putting your money into an asset to get returns, to grow your money. That if I put in 10,000 naira into a mutual funds account or into bonds, or I buy stocks, I expect to have appreciation on those money in another few months. Some might take years, some may take months. But what we are saying here is that for investing, your money is about your money growing. For savings, about you setting aside funds to meet up a target. While for investment is for you to grow your money. So the two are different. Now, under investing for growth, we also need to, there's what we call diversify investment to spread the risks. Now, what does this mean? That, okay, I have, let me say, I have 100,000 naira extra. I've saved 100,000 naira. Now, this 100,000 naira, I want to invest it. Now, diversifying it means that instead of just using that money to buy a particular investment line, I want to spread it. I say, okay, this 100,000 naira, I'm going to use 50,000 naira to buy stock from the stock market. I'm going to use 20,000 naira to buy bonds. I'm going to use 30,000 naira to buy real estate investment. Now, in that categories of portfolio, I'll be able to diversify my risk so that if anything happens in the stock market, like now there's a red run on the Nigerian stock market. If you check, you'll be seeing red now. But what does that mean? It means that people are, taking profit, they are selling off, trying to invest in other alternative investment option. But if you have a diversified portfolio, the other portfolio can begin to rebound and, balance your investment so that you don't lose your 100,000 naira. So that's what diversifying your investment risk means. And you consider working with a financial advisor to develop an investment strategy. Now, because of the technicality involved in the investment instrument, it's important to, work with financial experts to ensure that you can manage your money effectively and you are getting good returns. Even though we have some other apps, we have some investment stock app that one can use, but it's also important that you let someone guide you. Now, for stock broking now, with 100,000, you can open a stock broking account, and your stockbroker will enable you, we help you manage your stock, give information, and they have, some of them have what we call online apps that the app is set up for you. You can able to see how your investment is growing. You can able to see how share prices are appreciating, and if they're also going down, you can see it. So it brings its own one for the monitoring yourself. You can also monitor it yourself, and they advise you that, oh, this stock, it's time to sell it. And you can see indication that, oh, it's time to actually sell it. So based on this, I've put in some, Instagram handles for financial learning and information. These three are one of the majorly follow Instagram handles that we can learn from them. We can pick information from them on a daily basis. Some of them are full of investment that they do, like Money Africa as one that they do for people. The same thing is Financial Jennifer. I think Financial Jennifer will speak more for female empowerment and financial empowerment. So you can follow them on Instagram, get familiarized with them, ask questions, and you can take advantage of the investment opportunity they have. So financial growth is essential, an essential skill for achieving financial success by understanding key concepts and implementing sound financial practices. Individuals can build wealth and secure their financial growth. Taking control, the journey starts now and the growth starts today. I put the contact us for financial guidance and support. That's fine. You can also always do that. As an educator, Mr. Keo has mentioned that we need this information. We need to be ahead of time. We need to, when our students ask questions, to be able to give them feedback. And we should be able to get information, basic one, around what is happening around us. Recently, there's a meeting that just had last week by CBN. They call it the Monetary Policy Committee, and some decisions were taken there. And one of those decisions is a particular rate that was increased from 18.75 to 22.75. That's the monetary policy rate. Now, the implication of this rate is that the government is trying to, what CBN is trying to do is to mop up funds. They want to reduce excess liquidity from the market. And what do we mean? That means to get bank loans for personal or financial is going to be very, very expensive now. As of last week and this weekend, some of the banks have been letting their customer know that, if your loan that was 22% now is now 25% interest rate. That is it has went up by 3%. So what it means that to get loan now for businesses is going to be at a very high cost. Now, what's the alternative? The alternative is that if getting loan is becoming expensive, it means savings is also going to be very, enticing this time around. The borrowing rate now the deposit rate will now go up. So what does that mean for you and I? It means that if you're able to put money in savings and investment, this is the time. The government has a threshold bill of 365 days that is going at the rate of 19%. So what this means is that a lot of people are going to start pulling money into fixed deposits, into commercial papers, into treasury bills, because even your savings account, if you have a savings account, I think some savings accounts are doing 2%, some are doing, that is normal savings account with bank, some are doing 2%, some are doing 4%. By now, that rate is going to go up as much as 6 to 7%. And, for savings account, banks have different categories. Some of them will tell you that you have to leave money in that account for 30 days. That is when you can earn interest. So this is another way to, make some returns. And, for returns is a gradual process. It's a daily build-up. It's not something that is multiplying your money. It's not money doubling exercise. So we also need to be very careful about investment we are doing. Any investment that the rate of return look ridiculous, we need to be very careful. All the information, we get our information, so we have to be very careful so we don't lose money. I know we can still remember MMM some years back. Some people are still falling victim of MMM up until now. So we have to be very careful. When we are dealing with investment, let's deal with banks or recognized financial institutions, and let's have good advisors that can direct us so that we don't put our money where it will go down the drain. So as a role model, teachers serve as role model for the students. By demonstrating good financial habit and knowledge, teacher can, positively influence the student attitude and behavior towards money. So we'll talk about budget. I said, let me just recap. Budgeting involves you creating a plan to manage your income and expenses effectively. It helps us to track our spending, prioritize our expenses, and achieve our financial goal. Savings, on the other hand, involves setting aside a portion of our income for future use. It provides a financial cushion for emergency and help individuals work towards long-term goals like buying a house or funding retirement. While investment involves putting money into an asset with the expectation of earning a return. It allows individuals to grow their wealth over time through compounding returns. You can see over time. So it's not going to be, oh, I put my money investment tomorrow, I'm expecting that return. No, it's over time, it grows. And we also talk about debt management, involve us managing and repaying debt, involve understanding different type of debt, the managing interest, the interest rate they're offering us, and you develop a strategy. If you have too much of debt on your decks, how are you going to manage to pay off? So you need to really sit down and be disciplined, because in this environment, it's very easy for the loan shark people to come and take loan. You can see it's on our face every day. You go to open your bank, open your social media account, it pops up on your phone. Oh, what they call I can't even remember the name. Several of them say, come and get this, come and get that. So we have to be very careful about that. So I'm going to round up by saying, now is the time. Let's start early. The power of compounding allows investment to grow over time. So it's important for us to start saving and investing as early as possible to maximize our return. So today is another good day to start, to make those decisions about what you want to save, what you want to invest, what expenses you want to cut down, and the fact that you need to monitor your expenses and be able to cut them down by saying living within our means. So I won't start early. The next one is to live within our means. It's very important. We should have one lifestyle that shows that we are living above our means, so that we'll be able to save money and achieve financial security faster. Now it's time to cut down some expenses that now this one just have to wait. If you need to manage, is it important? Is it necessary? Is it urgent? Is it critical? Those are the questions you're going to ask. Apart from what is the things that enhances our normal living, any other thing that comes up, he asks that question. Okay. I also mentioned about continue.
No.
Hello, is my time up?
Participants, kindly mute yourself, please. The presentation is still going on.
Someone should. I think someone's mic needs to be muted.
Mr. Olukayo, they kindly mute your mic. Mr. Okewo, can you mute him, please?
Okay, can I continue?
Yes, please. Go ahead, sir. Let's wrap it up.
Okay, so I said for rounding off, we said we need to start now. Starting early is very important. So there's no time to waste time. So this is the best time to start analyzing our position, decide on what we want to save, what we need to cut down, and what we want to invest our money on. So start now. Then living within our means, it's time to start cutting out some things out. We ask those questions: is this important? Is it urgent? Is it critical? On those questions, anything that cannot, apart from normal daily living, any other item that cannot ask that question, that means you can still wait for now. Then continuous learning is important for us to, take advantage of information, and the only way we can do that is by learning, following the expert in the field, reading, and being able to ask questions. And Google is also our friend now. You can be able to ask questions about what is happening, what are the financial investment opportunity. When you get that, you can now begin to ask from an expert before you put in your phone. Resource for further learning as an we have online courses that one can take. There are books like Rich Dad Poor Dad by Robert Kiyosaki. You can get that. There's a hardcover, there's an e-cover of that book. The Intelligent Investor by Benjamin Graham. You can also get that book and read online. The Total Money Makeover by David Ramsey. These are books that we can lay our hand on and start reading. Then we should not shy away from attending workshop. Yes, some workshop can say pay 5,000, pay this. You can just try it out, and you you'll be amazed at the end of the day, the information you are going to get from there. But like I said, it's important that we make attempt to learn and get information. Financial literacy is a critical skill that empower individual to achieve financial goal and secure their future. And I know everyone is very, very interested in securing our future. So as educators, teachers have a unique opportunity to impart this knowledge and send their students on the path to financial success. By practicing good financial habits and continual learning about personal finance topic, teacher can serve as a role model and positively impact the financial well-being of future generation. Thank you very much.
Thank you.
Amazing. Thank you very much, Mr. Lucisi. That has been quite insightful. We really appreciate it. I trust that people have questions, but at the end of the whole session, that's when the questions will be asked. I would like to take it up from where you mentioned that people should be careful what they invest their money in. They have to be registered organizations and reputable organizations. And that brings us to our next presentation, which is from AFEX, African Exchange. They are a government-regulated exchange platform. They have an infrastructure and platform for investments that is regulated by the Securities and Exchange Commission. And they are here today to speak to us as educators, talking about possible options where educators can get involved to make investments within the Nigerian commodities market. I would just like to hand over to AFEX representatives so that they can take it up from here. Thank you.
Thank you very much for the opportunity to be able to discuss investments and the opportunities in commodities markets. My name is Mary Joy Opara. I work with the financial market team in AFEX. And the financial markets, we are solely responsible for product development, market sensitization, and then whenever we develop products that concerns commodities, it gets to our clients. We'll be doing a lot of back work as to talking about commodities, especially in Nigeria. And it is a lot of work, because even the equities market that has been on for years, a lot of people are still struggling to understand what equity is all about. And then we coming into the market with commodities, I mean, it's been a lot of work trying to sensitize the market or individuals about the essence of investing, or even talk about investing in commodities. Like I said, I'm really grateful for this session, and I have my team here. I think I have two of my colleagues that joined this call to back me up, just in case you people want to throw buzzwords anyhow. But I mean, we are fully prepared to take your questions. I don't know, if I can share my screen, because I would want to talk about commodities. Okay, I think I can do that now. I don't know if anyone can see my screen.
Not yet.
Not yet.
Your screen is up now. Thank you.
Okay.
You just showed.
Okay, sorry, I need to work on something. Okay. I think it should be back up now. All right, thank you very much once more. Before I go into commodities investments, I would want to briefly talk about AFEX as an organization. And I like what the previous speaker mentioned about investment, and it's quite very normal in Nigeria for people to fall prey, especially during the MMM period. There are a lot of investments, agro products out there, but it's also important for people to ask the right questions when you want to invest. And part of it is, who are the people that regulate this investment? What happens if they go under? Who would stand in for me as an investor? And the apex regulator is SEC, that's Securities and Exchange Commission. So whatever broker, whatever platform that should be talking to you about investments should at least be registered with SEC. Same as AFEX, we are also registered with SEC as an SRO. So we are a self-regulating organization, just like your NGX, where you trade equities. AFEX is a privately led commodities exchange in Nigeria. AFEX was established in 2014, and part of the reason why it was established was to drive capital and to build a trust economy in Africa. We provide solutions to trading, financing, and access to markets. Over the years, we've been able to have grown. I mean, AFEX has grown very well in the ecosystem. And as an entity, we have three, based on our business model as an entity, AFEX, we have AFEX Fair Trade Limited that involves the interaction with farmers, the facilities, and then we have AFEX Commodities Exchange, which is access to markets. So you and I can come and buy commodity-backed instruments or even spot contracts through the exchange. And then there's AFEX Investment Limited. It was set up to provide finance to those involved in the value chain of agriculture. I know I hope this session will not be a one-time session, because it is a lot. Understanding AFEX business model, understanding commodities is a lot. So I hope that from time to time we would also have opportunities and platforms like this to talk about commodities in depth. So for today, being the first time we're talking, I would take it to the very basic. I'll talk about the commodities market, commodity as an asset class, a little bit on the drivers of commodity, and the products that we offer in AFEX. So what is commodity really? A lot of us are very, very familiar with commodities, be it agriculture or maybe metal, gold, they're all commodities. And the basic definition is the raw material that can be bought or sold. One of the feature of commodity is it is uniform in nature, and it is used as inputs to create finished goods. So one of the major costs of owning a physical commodity is financing, transportation, storage, and insurance. And why we highlighted this is because even if you look at the commodity ecosystem in Nigeria, for you to set up a commodity exchange, it will require a lot of financing, a lot of costs in terms of storage facility. And that is why AFEX was able to set up a business model for that. That's the AFEX Fair Trade Limited I mentioned. What are the most traded commodities in Nigeria? We have crude oil, steel, soybean, iron, cocoa, corn, gold, copper, aluminum, and silver. And the major categories of commodities, I would typically categorize it into hard and soft commodities. And I think Google can agree with that, because hard commodities are extracted from the earth, while soft commodities are grown. So you see grains and oilseed. When you talk of soft commodities, we talk about coffee, cocoa, because they are grown. Then we livestock, energy, base, precious metal. Grains and oilseeds, these are the major seeds, grains and oilseeds that are being traded. So you can either trade them physically or buy it through an exchange as the securitized version. I'll go into all of that, but I just want to give the basics for commodities. And you see a lot of by the time I talk about commodities in depth, you would agree with me why we do not have a lot of palm oil traded commodities in Nigeria in a standardized manner. Soft commodities, we look at cotton, sugar, coffee, orange juice, because I already mentioned that soft commodities are grown. And then energy commodities, we see crude oil, natural gas, electricity, gasoline, diesel, other fuels. Precious metals, these are the precious metals. We have gold, silver, platinum, and we know that these are very difficult to find. People that hold gold and silver know how valuable these assets are. So it is not your regular commodity that you trade day to day, but this is part of commodities that are being traded, but it is rare because of the kind of asset it is. Now, what makes a commodity tradable? Now, there are various reasons why, or there are various attributes to the tradability of a commodity. But then we look at the price and the standardized part. We can also, I mean, if you Google more on commodities, you see that commodities should be divisible, should be interchangeable, which is quite correct. But looking across the various commodities that I mentioned, the generic is it should be standardized such that every unit in terms of quality must be specified. And then the price should be largely uniform. However, there are certain things that would affect the price of commodities depending on the region. It should be able to be grown, produced, mined, or extracted. Now, how commodities are traded. Commodities can be traded either in the spot market or derivatives market. Now, sports market is bringing it to AFEX. Yeah, sports market is, I want to buy, I mean, there are different types of sports. Let me not try to make it complex, but sports market is I'm buying commodities and I'm getting delivery immediately, or I'm getting delivery immediately or my cash immediately. And then we have the derivatives market. Derivatives is a very, very long conversation. There are a lot of topics, there are a lot of trainings on derivatives, and I'm not the expert here, but what is derivatives really? So derivatives is basically a contract between two people that which derives its value and price from an underlying asset. More like you and I come and then we make a contract based on, let me take for example maize. I think there's a slide that speaks in depth to the different types of commodities, but then it is two people coming to a contract, set a delivery date, and they are a price that we would buy the commodities. There are different players in the commodities market. We have the hedgers, arbitrageurs, and speculators. We also have the futures and option contracts. So for futures, it is, I'm buying an asset at an agreed price and at a specified date. And then the parties are under the obligation to perform the contract. Why forward is an obligation to perform the contract, but in an unstandardized manner. So the difference between future and option is just trading it in a standardized market. Now, AFEX as a commodities exchange is a standardized market. If I'm going to be trading commodities, I will be trading forward contracts as to, we set a date for which I would pick up the commodity based on a price. So I mentioned we have speculators, hedgers, arbitrage. So speculators are people that would buy for the sole purpose of gaining within it at the end of a particular period. So I buy, just like we do with our currency, you buy dollar now with the hope that, oh, in 2-3 months time, dollar would go up and then you take advantage of the price. Same thing with arbitrageurs, they do that. And then hedgers also buy commodities with more like hedging against what will happen in the future. So, okay, now I think this is in depth. So hedgers lock in a buy price at a delivery time. So take, for example, a corn farmer knows that at harvest time, this is what I would sell my maize. And then you as a buyer would say, okay, I think based on what I have looked at the trends in the market, maize will sell at 500 naira per kg during harvest season. And then the corn farmer feels, oh, 500 is also fine for me. And then he locks that contract in for probably the period of time. That's what hedgers do. While speculators will also take a bet on the price and say, okay, I'm speculating that the price of dollar will go to this certain period, and then I buy it with the purpose of making profits in future. While arbitrators identify the mispricing and take advantage of that. Like I said, commodity derivatives is a lot. It's people take trainings on derivatives, so I'm not going to dwell so much on that. Maybe when we launch derivatives on our exchange, we can also set a platform where we talk about derivatives. But let's bring it to commodity as an asset class. I listened to the previous speaker and he mentioned a lot about mutual funds, maybe equities. We have piggy vest. Very good. But then I'm sure most of us do not know that you can actually buy commodities or buy commodity-backed instruments. And that is why over time, if you look at the graph that we have here, you can see the correlation between ACI. ACI is our index, that's AFEX commodity index. And then there is NGX, that's that Nigeria index, and then all share index with federal government bonds. You see that over time, commodities have shown stronger return because of the underlying assets. It is a hedge against inflation. It has low correlation with other asset class. And then you see low a relationship with economic cycle. I think I'll just go in depth into why I said this is. So take, for example, not even take for inflation currently is at 29.9. And what is the major driver of inflation? Food. So you see that the reason why if food inflation keeps going up is because of the high price in food, which reduces your the value of your naira. But then we look at our index, AFEX. So we have a product that we launch. It's our flagship product. It is AFEX FETC fair trade, AFEX fair trade, yeah, commodities. Last year, it returned over 50%. And it is not magic. It is because what we put into that basket is commodities. We have maize, cocoa. You can agree with me that the price of fish today in the market will not be the price of fish tomorrow. And because the reason why inflation is going up because of the high cost of food, you can see that you that trade commodities, that's agricultural commodities, you are at an edge against someone that is trading equities or bonds, because what is driving food prices is also food, and then you are trading food itself. So you can see that if you look at inflation figures, if you look at over time the performance of the commodities, you see a strong return in the price of commodity or commodity-backed instruments. I think I would talk about our instruments and talk about the risk, talk about all that you need to know, and we are really open to questions. So how can you invest in commodities? You can either buy the physical good, you can buy the commodity-linked instrument, or buy direct, maybe equity in the company itself. So in AFEX, we have a board called the DAWA board. That's the deliverable board. If you would want to buy maize in metric tons, you can actually buy, because we have over, I mean, this is also important to know that AFEX has over 250 warehouses across the 28 states and geopolitical zones in Nigeria. We have warehouses in the north. In Lagos, we have at Ikorodu, we have at Ibadan, we have across the various geopolitical zones, we have warehouses where farmers put in their commodities. So you as an investor can decide to buy maize rather, or if you want to buy cocoa or you want to buy cashew, you can actually buy it and then have own possession of the commodity, either for personal consumption, or you also want to trade it maybe to someone that you think would need maize in a few months' time, and then the price would have gone up. So you can actually take physical delivery of the commodity, or you can buy into the commodity-linked instruments. And we have a couple of them on our exchange, which I would speak to in-depthly. But then you can buy maize. So even the maize that we're talking about, you can buy maize today at 450 naira per kg on the exchange. And within 2 weeks, you see maize going to 520 naira. I mean, I don't need to tell you why the price is going up. We all know what is going on in Nigeria. We usually have our analyst call once in 2 weeks. And then we talk about the prices of commodities. I mean, the question, we see a lot of people saying, oh, so if I had taken position last 2 weeks on maize, to buy maize on the exchange, that means I would have gained over 5%, 10%, which you hardly see in most of the asset class. But not to say that commodity should be the only asset class you have or the only investments you have in your portfolio. You can have a bit of equity, debt. I mean, I think the last speaker mentioned having a portfolio manager or an portfolio advisor, investment advisor. It is also very important because you might not be very sound when it comes to investments, especially in commodities. But then having an advisor can help you say, okay, you know what, you have 100,000 naira. How about what are your investment goals? What do you think? What do you aim to achieve within this period? Now look at the various asset classes. Can we put 50% in commodities, put 20% in equities, put 10% in debt? It will just help you spread your risk, and then you see yourself getting higher return than when you put your money in just piggy vest. You put your 100,000 in piggy vest waiting for 3 months or 4 months, when you can as well move 100,000 naira, put it in 3 different investments, and then you get a higher return. That is one of the major importance of having commodities in your portfolio basket. And then you can also buy through direct equity if you're buying equity in the company. But that one is quite relative because you're not directly investing in the commodities, but you're investing in the company that trades the commodities. This part is also very important. What are the basic factors that affect commodity investments? Economic activities, government policies, inventory levy, technology, season, and geopolitical events. Now, let me start with seasonality. Seasonality, currently in Nigeria, we are a rain-fed country, which shouldn't be. So we depend on commodities. What we think we need to do, agricultural commodities do not need water, they do not need rain. It needs water, but we can agree that there's an infrastructural gap which makes us rely solely on rain for us to have certain commodities, agricultural commodities. But you look at the price during harvest season and planting season. So now most of the commodities are not, some of the commodities are not in season. You will see price rally around. Then during harvest period, you see price is dropping. Not entirely, but because it is harvest season, what happens during harvest? There is surplus in the markets. And you know the basic economics, when there is high supply in the markets, the price will go down. So that's what typically happens during the because Nigeria is a rain-fed country, we have to depend on rain. So you can also, as an investor, take note that, okay, I think I should lock in my funds during harvest season because prices of commodities will be relatively cheap. But you know, as time advances, as we get to planting season, this scarcity allows for higher price in commodities. We look at the technological developments. Technology has a very impact on commodities, especially for agricultural commodities. What have we put in place? But one thing we've done at AFEX is we've built a beautiful technology. We've seen the gaps, and then we have the trading platform, which is Africa Exchange. You can check our platform, see how, look through it. If you have questions, you can reach out to us at AFEX. You can trade commodities. You can get real-time data through our platform. We also have Workbench, because when we talk to people, we're like, how are you able to monitor the farmers? How are you able to monitor delivery points? We actually built a technology where we can monitor the points at which these commodities, from when the farmer puts it in the warehouse to when it is distributed, we actually have that commodity. And we can see the great impact as to sustainability. And then we're able to account for the commodities that are being brought to the warehouse or being traded. Government policies, I don't think it is limited to commodities. Whatever investment class, the assets that you're buying into, either mutual funds, you see a lot of effect on government policies. The last speaker mentioned, Mr. Lucy mentioned NPR has gone up to, I think, 22.7. How do you think that would affect your fixed income instruments? Savings will go up. So if you as an investor buy into treasury bills, government bonds, corporate bonds, commercial papers, you'll be bargaining for a higher yield because the lending rate has gone up. So you see how even when governments came and said the whole dollar, the whole regulation on dollar, you see how it affects commodities that are being exported. So one of our major commodity that we export is cocoa. And you see a lot of questions. So there was even a product that we listed that was dollar backed. And then there was this regulation on, oh, you can't transfer back dollar, there's a cap. You see how all of that fits into investments. You see economic activities. What is the economy? What are the activities happening? You look at inflation, you look at all of that. That fits into the price of commodities. I think just because of time, I wouldn't want to dwell so much on this, but it is important. So for risk management and techniques, you can hedge. One thing I'm a fan of, and one thing I do as an investor is diversification. I don't put my eggs in one basket. I don't just have investments in one platform. I have investments in different. At the end of the period, I'm getting a higher return because I've spread my risk and return over time. Now, AFEX products. The products that as an investor, how can you take position? I've talked about factors, I've talked about different commodities. So currently at AFEX, we are an agricultural commodities exchange. However, we would launch gold very soon. We should have launched that, but because of the whole Dubai ban, and then that affected our products. But then we are moving away from being an agricultural commodity exchange to trading other commodities. There are a lot of research going on fossil fuels, carbon credits. Now, one of the major challenges will be infrastructure. For you to have a very solid exchange, you need to have infrastructures put in place. So even for these commodities, I mean, you ask, how are these commodities? Where are they? How do you guys manage flooding? How do you guys do all of that? I mean, it's a very, very valid question if I get that, and I'll be open to answering that. But then you see how we just want to move away from that agricultural part to having other products that are commodities on our exchange rather. Now for spot commodities, it is the direct purchase of commodities. So I mentioned earlier that we have two boards, or we have three boards actually. DAWA, that is you're requesting for delivery. There is OTC, that is for larger trades. And then there is spots for you and I that might not have the infrastructure to put maize or soybean or sorghum in my warehouse. I don't have a warehouse, but I want to invest in commodities. Do I need to pick up the commodities? No, you can actually buy securitized version of this commodity. How it works is when a farmer or when there is a deposit into our warehouse, the farmer gets the e-warehouse receipt, which is then traded on the exchange. So the e-warehouse receipt is what is listed, and that is what you and I can buy. So I can come to AFEX Commodities Exchange and buy 500 units of maize and put in my portfolio, and maybe look at the price and say, okay, within next 2 months, maize should go up, I would sell. That is, you're buying maize, but you're not buying the physical, you're not taking physical delivery. So, I mean, to bring it as basic, it's just like you're trading equities. If you're quite familiar with equities, you're buying 1 unit of GTB. You don't have GTB, you don't have the building, but you're buying GTB, you're buying Transcorp, you're buying it to keep it in your portfolio, hoping that within a certain period, you would get your dividend for investing in maybe GTB, and then you get capital appreciation because the price of GTB has gone up. But it is a risky, I won't say it is risky, but the risk is high. But then what happens when there's a saying that the higher the risk, the higher the return. The risk is quite high for people that might not be familiar with how commodities work or how to hedge against your price. But then that's where we have other fixed income instruments that allows you to buy into commodities, but you're not buying maize, but you're buying a commodity linked instrument. So the ETC was what I mentioned earlier, where we have the FETC. So bringing it to mutual funds. So mutual funds is I am pulling funds of investors to invest in a basket of fixed income instruments, depending on the allocation. So now what we do is I get cocoa, I get maize, I get cashew, I get sorghum, put it in a basket. So instead of you buying one maize, 2 cocoa, 3 units of sorghum, you're buying a basket. And then you can see that cocoa, I already mentioned maize and cocoa very well, because those are the commodities that are, I mean, you see the price movements very, price goes up because of the demand of those commodities. I mean, we put that in a basket, you buy into it, you keep it in your portfolio for 270 days, because that is the typical cycle for commodities. And then at maturity, you get your fund. We brought out, or we issued one last year, FETC, although it's closed, so you can't buy to FETC until it is available in the secondary market. But when we tell people, people are always very eager to invest because of the historical performance. I mentioned earlier that one of the FETC did over 50-something percent, 54%. Our first ETC was in 2020, and it still outperformed the market. And it was an outlier because of ginger. You can agree with me, during COVID, how ginger was a great demand for, was one of the highest demanded commodity, because of the whole, if you drink ginger, it will help you with COVID. So our portfolio did so well because of ginger. I mean, it's an outlier. It's not something that you would see all the time, but it just shows you, it just lets you know how important commodities is as an investment class. Now, input note is directly financing commodity producers. So what we do at AFEX is, I mentioned that we have an entity that is involved in the distribution of funds or allocation of funds to those involved in value chain. And when we talk about the value chain, we talk about the farmers, the agro processors, the off-takers. So farmers, I mean, you can agree that in financing farmers is one of the major reasons why farmers don't go, aside the securities. They don't have enough money for large production. And because we're a rain-fed, we have to depend on rain. So it's only when there is rain that you see all of them going to the farm. So when there is no input from them, you see them not producing. So based on our sustainability strategy, and because of our SDG goal, which is no poverty, zero poverty, we finance farmers by giving them inputs, seedlings, fertilizers. So we are big on good inputs, because you cannot bring anyhow, or you can't bring substandard products to our warehouse. So there are standards that we've put in place for commodities that comes to the warehouse. So we give them good inputs that will yield them, I mean, as much as possible, great results, which are in turn brought to the warehouse, that can either be for delivery or for trades on the exchange. Trade finance notes, which we currently have one, which will close on Monday. So it is usually, so we have trade finance notes, sometimes short term, which is within 120 to 270 days. For an off-taker that would have a contract to fulfill, take for example, I am, let me say Babangona, or let me say Mary Joy and Co. commodity, and I have a contract to supply maize to, let's say, Olam in 2 or 4 months. And you know, once contracts come like that, the financing is a big deal. And so you see, they lack finance. That's where AFEX comes in. We give you that short-term financing with definitely with a rate. And then at the end of the day, we pay back investors. So we have one currently in the market, which is for 120 days. The rate is 19% per annum, but if you're going to calculate it based on 120, that's about 6.25 here. So if you're coming in 120, after 120 days, we pay in your fund, the expertise gives us our money, we pay investors' funds. Just the same way government comes to the market, or company comes to the market to raise funds for working capital, same we raise for those in the value chain. Then asset-backed commercial paper, it is usually our institutional product because of the minimum amount. So for the trade finance, it's just 1,000 naira. It is for retail investors. But for asset-backed commercial paper, you know how commercial paper works, 270 days. You're raising funds for agro processors. Let me just speak briefly to this. So for an agro processor that needs working capital, but I have commodities, I don't want to go to the bank, because bank does not even understand the agricultural process. They would price higher because they really do not understand. Some of them do not understand the process. But I have an exchange that is an expert on commodities. They come to AFEX. I'll give you commodities, give me funds. We have a warehouse where it to be stored. So whenever we raise funds for agro processors, they come into the market, we get from investors, give to them, they drop. So it is collateralized, unlike the commercial paper that is in the market where there's no collateral. We get commodities and give them funds. Whenever they want to take off funds too, they get commodities. So it is, like I said, it is not going to be a one-time conversation, but it is something we're open to having in-depth conversation. This is just to introduce to you what we do at AFEX and the products that we offer. I mean, I already mentioned the drivers, seasonality. I already talked about government policies, how all of this affects even the commodity itself, insect diseases affects the primary production, storage infrastructure, seasonality of the commodities. All of these are drivers of factors that will typically affect agricultural commodities. And same with energy commodities, the production level, demand, supply, what the economy is saying will also determine the price of commodities. What are the substitutes in the market will determine the price of energy commodities. And then you need to look at the geopolitical events, the how you can see the price of crude oil in Nigeria, the price of fuel. You see, when there's instability, there are a lot of uncertainty as to price. And then when something is uncertain, you see that the price of this commodity is going up. I think I would like to end it here. I can share the slides afterwards, which you can go through and we'll have questions. I know I must have taken so much time. Thank you very much. I think we can begin with questions right now.
Thank you so much, AFEX, for that a good introduction into the commodity space and into the product that AFEX offers. We are very appreciative. We've taken a bit of time, but it's been worth it because we have learned quite a lot. We would like to know right now if there are questions. I have one question for Mr. Oluseyi, but do we have questions for AFEX? If you have questions, this would be a good time to put them up in the chat section so that we can address them while everyone is here. Mr. Oluseyi, are you available so that I can ask the question?
Yes, I'm with you.
Okay, so you talked about loans and you advised, strictly on how it's important to carefully consider why a loan is being collected, and you talked about how it can have compound effects eventually. I know I've come across where we've seen conversations about good loans and bad loans. What is your advice regarding good loans?
Okay, can you hear me?
Yes, please, we can hear you.
Okay, so first of all is to run the figures. If I'm taking something up with a bank, what is the interest rate they are charging me? What is my payment on a monthly basis? So once I see those terms and conditions, I'll be able to know how much it is that they are charging me, whether the interest, because some of these loan charge, what they do is they do a daily compounding of your interest, of your outstanding amount for you. At the beginning, they will not tell you that. That is, they take charges on the opening balance on your opening balance of what is outstanding on daily basis. So you can imagine, say for example, if you go for GTB now, GTB have a loan calculator. So on GTB loan calculator, if you put in a loan of 100,000, you will see that it will tell you how much you're going to pay at the end of the loan. You put in the parameter, okay, I want 100K, I want it for 6 months, and the interest rates, they let you know. Once you input that, you will see how much you are going to be paying on monthly basis and total interest on that particular amount of loan. Whereas for the loan sharks, they won't give you all this detail. They just tell you, oh, we can make 10,000 naira available every day, or we can do you 100,000 minimum and this and that. At the end of the day, someone can take 100,000 and end up paying like almost 180,000 naira. Look at the difference. That's like maximum of, you're paying like 80,000 naira. But if it's a bank loan, your interest probably may not be more than 28,000. So it's for us to dig down the figures, ask questions, request for your payment schedule, and compare. Hello, sir.
Yes, we can hear you. Thank you so much. I also wanted to know if it's advisable to take loans to make investments or to, invest.
Yes, for that is a bit technical, but at the same time, you have to look at two things. What is the bank charging you for the interest? And what's the investment you are putting your loan to? What is it giving you? So whereby you have a difference of maybe you are above by 1% or 2%, you could do that. So if you are taking a loan from bank and you are paying 20% of interest per annum, and you are doing an investment that's just returning 8% or 18% per annum, so that's a negative difference of 2%. But if it's the other way around, you took a loan of 20%, you invested in an instrument that's returning like 21% for you. You can see there's a net margin of like 1%. So those are what you look at before you take that decision.
Thank you. Thank you very much. I appreciate that. AFEX representatives, we have two questions in the chat box. Can you address them quickly? AFEX, are you there? I can ask the questions if you're available.
Oh, sorry, I didn't know that I was muted.
Oh, okay.
Yeah, so I think the first question is, how can one invest in the trade finance note, and how is the interest rate and the duration? So the trade finance note, which is available, is 120 days. So if you invest now, which is today is I think the 2nd of March, so maturity should be within July. Yeah. So it is for 120 days, that's 4 months. And then the rate is 19% per annum. Rates are usually calculated in 19 per annum. So it is 19% per annum. But then if you're going to calculate it based on 120 days, if you want to know, okay, if I invest this amount, this is what I'm getting, I think it's 6.25. Yes. So you can calculate based on that. We can share the notes with you. So you can go through it. And then if you have any question, we can help with that. It is a secured note such that at the end of 120, you get your capital plus your interest. So I hope that answers the question for the trade finance note. So it is, yeah, it's not that the product is always available in the market, but we try to make it monthly, but I mean, not all the time. These funds are based on requirements if we have our clients or those that we are financing make requests on. So that's why you will not typically see the ABCP in the market all the time. Good morning. What's the minimum amount to invest in agricultural commodities? What is the shortage duration? Some of the agricultural commodities can last. So if you can clarify your question, are you referring to physical commodities or the one traded on the exchange? So for the ones traded on the exchange, it is in perpetuity. No, I won't say in perpetuity. Let me not use the word. But as long as the commodity is listed on the exchange, you can keep it for a year. You can keep it for 2 years. You can keep it for as long as it is traded on the exchange. But then if you're talking about the physical, so you know how if you don't have the right storage facilities to be able to buy the physical commodities, then it won't last you. So one of the reasons why you can still talk about maize right now is because of the infrastructure that we have built. So when we have that large supply, when we have that large supply in our warehouse, it is stored properly. We have people that, we have warehouse facility managers. There are a lot of work that puts into that to ensure that the commodity can last for at least a year on in the warehouse. So if you're referring to the one you buy on the exchange, you can keep it as long as it is listed. But then as an investor, it is also good that from time to time you watch your portfolio. So you look at, okay, I have made 10%. Are we approaching harvest season where prices would likely come down? Should I sell? Those are the kind of questions you would ask your investment, your portfolio, your advisor, your broker to help you with. But also, it's also important that you know that okay, sorry, third question. It's also important that you know that commodities can be kept on the exchange for as long as it is still listed. I hope that answers your question. Can SEC be held responsible if AFEX defaults? Okay, SEC is our regulator, and if for any reason we default, we will be found wanted. So yes, you can speak to, I mean, I don't know if SEC representatives are available, but then yes, since AFEX is since SEC is our regulator, rather, yes, we are held responsible for whatever notes that is being put out there, and we must keep to their regulation if we don't want to be sanctioned. So yeah, I hope that answers your question.
Okay, great. We don't know if we have any other questions. Just to put it out there, SEC is the government agency in charge of regulating investments and commodity markets in Nigeria. So SEC is not going to be held responsible if AFEX defaults, but SEC has put things in place to make sure that AFEX does not default. And if AFEX defaults, AFEX has sponsored individuals and management staff who will be held responsible to the extent of their liability. So that's how it works. Thank you. We have shot above the stipulated time, so this would be a good time to wrap up. However, both sessions we had today were very awesome, but a lot more can still be learned from both parties that presented. We look forward to having more sessions like this, especially in the situation of the economy right now. People need as much information and knowledge as possible, and educators need even more, because to whom much is given, much is expected. So as educators, we need to know more, we need to be more comfortable, and we need to be able to invest better and have better returns so that we can impact the lives of the people we're educating even more positively. In that regard, we have one more question here. Maybe that'll be the last question. Please, AFEX representative, please handle.
Okay, what is the minimum amount that one can invest in one of these agri-commodities? So I wouldn't say there's a minimum amount, but if you're buying one, because it is listed in kg, so if you're buying 1 kg of maize, which is, take for example, 500 or 520, so the minimum amount would be typically, let me say, 550 because of the charges. So, you know, there's the broker fee, there is exchange fee, collateral management fee, which are it's not up to 1%. So yeah, so there is, I won't say the minimum is 500, but if you're buying a commodity, you can fund your account with 1,000 naira. That's on Africa Exchange. You can fund it with 1,000 and buy one commodity with that price, the price of the commodity as at then.
Okay, thank you. Just to be clear, this is 500. You were just saying 500. Is this 500 naira or 500 what?
Naira, please.
Okay, so in the answer to that question is there is available. You can purchase things for as low as 500 and something naira on the exchange.
Yeah, so there's actually no big flat fee as the minimum amount.
Thank you. That will be the last question for today's session. Thank you so much, everyone that's joined. We appreciate your interest in learning more on financial education, financial literacy, and investment options. We look forward to a part 2 of this session. We look forward to engaging AFEX more and getting them to explain more and educate us more so that we can make more educated investments and make positive returns. We also look forward to hearing from Mr. Lucy again so that we can hear more and learn more and do better in our financial escapades. Thank you so much, everyone. Please follow us on social media, on our Instagram handle and on our Twitter, and also on our Facebook. It is ERIT_TTN. That is ERIT_TTN. Also, check out our website, transformationalteachers.org. You can get more information on our events, on our trainings like this. You can register for trainings and you can have more conversations with us. For those who need to get these slides, feel free to go to that website. You'll see options to interact with us and we can send you slides via the email option out there. Thank you so much, everyone. Have a great weekend and we look forward to good interactions like this in future. Thank you, everyone. Thank you, AFEX. Thank you, Mr. Lucas. Thank you. Have a great weekend.
Thank you very much.
Thank you, everyone. Bye-bye.